Bitcoin broke out to a new high of 125,000 and change in early October, and it quickly fell back into its old trading range. But guess what? October is historically one of the best months for Bitcoin, so on today's Stocks in Translation, we are taking a look at Bitcoin seasonality and the next potential catalyst for the king of crypto. And just a quick reminder that seasonality refers to those recurring patterns that we typically see year after year. And in this first chart, we're taking a look at each month of the year broken down, and it's 2018 to 2024. Why did we start at 2018? Because that's when we got Bitcoin futures, and that's when Wall Street started taking notice of Bitcoin. If you go back further, you really have a different animal on your hands. But what stands out here is a few really positive months. So that's 18% in July, 11% median in February, and in October, also an 11% median. And I'm using the median instead of the average because that's right in the middle. If I use the average, you tend to get bigger numbers to the top side and then bigger numbers to the downside in the negative realms. But what you're going to notice here too is that after October, November and December, they skew negative. So unlike stocks where you typically get that end of the year rally basically from October through December 31st, not necessarily so in Bitcoin. However, we do have this positive catalyst right ahead of us. And here's another look at the month-by-month breakdown with win percentage. And what really stands out here is October is 86% positive going back to 2018. And that ties February over here, which was also a good month. And it's a bit bigger than July, which was the best month. So odds are working in the bulls' favor here. And one more thing is that if you break it down on a day-by-day basis, I have the entire year here from January 1st to December 31st, and in white is what the map is telling us. That's, again, the median from 2018 to 2024, and the green 2025 year-to-date. We are right now at the period of time when it historically inflects up. And so the middle of October into the first week of November is a very seasonally bullish time of year. And you can see how some of the swings that we've had in this year, and there was some interruptions, albeit with the post-Liberation Day sell-off, a lot of the recent swings have kind of coincided with the map. So things are definitely working in the bulls' favor right now. We'll have to see what comes of that. And let's take a look at what to watch now, because Bitcoin investors should be paying attention to a number of things. First, we have bank custody of Bitcoin and crypto assets that's starting to roll out right now. The SEC gave the green light on that way back in January, but banks have lots of regulators. They tend to move slowly. So many investment advisors have been waiting for the safety of bank custody, so watch out for these press releases from some of the biggest players. Then, number two, the ghost of Mt. Gox still haunting the blockchain. Way back in 2014, the world's largest crypto exchange failed spectacularly, and most of the confiscated coins has been distributed back to the owners, but we're finally up against a hard deadline on Halloween, October 31st. How fitting. There's a small chance that some whales could emerge and dump their new holdings after getting repaid, but that's just a small risk. Then, in the spring of 26, the IRS is rolling out new tax forms to report crypto sales. It's going to be a little bit more of a burden for crypto traders, and there could be a few jitters around tax day, but it's still a pretty small risk. You do have to watch ETF flows because something is definitely going on there. Spot crypto funds have raked in $40 billion so far this year, and any let-up in flows could signal lower crypto demand, which impacts price. And finally, watch the current trading range in Bitcoin, which has been in place since July from roughly 108,000 to the downside to 125,000 to the upside. And remember, Bitcoin is famous for its rug pulls and false breakouts, both to the upside and also to the downside.
Josh, definitely October not going well for all of crypto. In fact, since last Friday, you've had the crypto market that's shrunk by 600 billion. And if we take a look at our Wi-Fi Interactive, you'll see the action here today. We are watching Bitcoin that is around 106,000. It had gone down to around 104,000, 105,000 earlier in the session. But if we just take a look, I'm just going to pull up here a 10-day chart. You can see down down 12% over the last 10 days. We had seen Bitcoin at 126,000 at an all-time high back on October 6th. Then last Friday, Trump put out that social media post threatening China with 100% tariffs. And that's when you saw crypto really decline tremendously down to around 104,000 level. You had leveraged positions, you had long liquidations, and that really was what precipitated all the selling. Now you have had a choppy week, so to speak, over the last 5 days. But nevertheless, this has been a disappointing trade when you compare it to the likes of gold, for example. Even though gold is down today, I mean, gold has been sort of the safe haven. So even though today Trump talked about how the tariff talks are going well with China, and we've seen that the markets are up overall, but you're not seeing Bitcoin going up. So it's a bit of a head scratcher when it comes to some of the Bitcoin bulls out there, because this is supposed to be a strong month. And a lot of the big thesis has been that once gold had its rally, that you would see some of that money flowing into Bitcoin. We have yet to see sort of that rotation from gold into digital assets, cryptocurrencies.
Let's just first start off with the moves that we're seeing, because October is typically a month where we see crypto perform well. Not the case this time around.
Listen, when there are shocks in the system, people sell what they've got a profit in, and crypto's up this year. And so I think this is just people taking profits, which is healthy.
Okay, profit taking. But there is this push to launch more crypto ETFs. We've seen various brokerage firms saying that this is something they want to do more of. But money flowing out of those ETFs, like we just said, is that a concern at all when it comes to supply and demand dynamics there?
I think year-to-date flows are certainly net positive, and I think you'll see them continue to grow over the next few years. The Solana ETF filings are obviously out. Fidelity, VanEck, Franklin Templeton, Bitwise, and others. And many have recently updated their S1s to include fees, which is usually the last step in the process. So hopefully more ETFs coming soon.
And explain to me the difference when it comes to Bitcoin, Ethereum. You were just talking about Solana. I feel like for early crypto adopters, maybe they're just concentrated on Bitcoin and Ethereum. Why should Solana maybe be part of the conversation?
Yeah, so the total industry market cap is somewhere around 3 trillion. Bitcoin being the dominant position in that. Ethereum being the second largest and Solana being right behind it. And so I think if you want to have a diversified portfolio, you probably want exposure to all of them. But the important thing to remember is what the differences are between Bitcoin, Ethereum, and Solana in terms of the asset as well as the technology. Bitcoin is typically seen as digital gold, Ethereum, digital oil, and Solana is the fastest growing technology platform in the world. And so if you want to think about having exposure to the Mag 7, which has driven a large part of the S&P's growth this year, you also want to include Solana because it should be part of that story with Meta, with Google, with OpenAI, with NVIDIA, and those types of companies.
And how can investors get exposure to Solana? Is it through those ETFs as well?
Soon. We've got a number of large asset managers, including Fidelity, have filed for Solana exchange-traded products, and currently there's a government shutdown, which has delayed the SEC approving some of these S1s, but I think you'll see them hopefully approved soon. There's also a large and growing number of DATs, digital asset treasury companies, similar to what Strategy has done for Bitcoin. There are now a number of these that are supporting the Solana ecosystem, including Forward Industries, which raised $1.65 billion a couple weeks ago.
So with these ETFs set to come down the pipeline, how is Solana really positioning itself to grab that investor attention?
Yeah, I think it's a really clear narrative, which is Solana is among the fastest growing technology companies in the world. And with staking, Solana also prints a 7, 8, 9% yield by staking and generating the rewards from that.
And on a volatility basis, does that make Solana maybe less volatile to some of the moves that we see in crypto and Bitcoin, I guess, more generally?
Crypto is one of the most volatile asset classes out there. And I think folks that allocate to the asset class do it in part for the vol, right? You get the reward with the risk. And I think that's something that you want in a diversified portfolio.
And part of that volatility story has just been the embrace from the Trump administration, right? That's led to a lot of the gains that we've seen. So how has this administration really changed the trajectory for crypto?
It's been just such an enormous lift for the industry. Obviously, the executive branch has done a lot. We've seen administrative action from the SEC, CFTC, and other administrative agencies, but also, most importantly, you saw a legislative branch act with the Genius Act passing earlier this summer, and that has created an absolute groundswell of activity in the stablecoin space and more broadly in tokenization.
Yeah, you hear the word stablecoin and tokenization quite frequently from some of the biggest companies out there, and I guess what more would you love to see on the regulatory front?
So the Clarity Act is another bill that's in Congress today, and I think that will help the markets understand, what is a commodity, what is a security, what are the registration processes, and how can the various ecosystem participants, what do they need to do to provide exposure to digital assets to the broader retail and institutional investor base.
Mm-hmm. And when we look at Bitcoin, Ethereum, Solana, do they often move in tandem with each other? And if you're an investor, do you want to be exposed to all three? Do you want to be concentrated in one?
So I don't know the latest correlations, but generally Bitcoin and Solana have a tighter correlation than Solana and Ethereum do.
All right, really interesting stuff. Nick, thank you so much. Appreciate it. We'll see what happens with the rest of these crypto moves, as it's often a volatile asset. Last week, we were just trading at record highs of Bitcoin. So you never know, but appreciate you joining us on set.
Thank you so much.
Bitcoin and Ethereum both sliding today. The pullback follows renewed tariff threats from President Trump that are rattling risk assets across the board. For more, we're going to bring in Maya Vujanovic, FG, Nexus CEO, Digital Assets. Maya, it's good to see you. So let's start big picture, Maya, because you look here, cryptocurrencies continue kind of losing ground. Bitcoin, Bloomberg noting if Ether actually risks lapsing into bear market territory. What do you chalk that up to? Is that macro worries, Maya? Is it folks just booking profit? What do you think?
Yeah, I think you're right. It's a combination of two. One, there's been a lot of OGs who've been in this market for a long time.
You've been in this market a long time.
Since 2010, Bitcoin. Yeah. But of course, I haven't held since 2010. I wish I did. But you're absolutely right. I think it's a combination of both. You've got macro, where tariffs are obviously, on one day Trump is going this direction, next day he's going on a different direction. So I think that is giving a bit of a risk-on sentiment to folks, certainly for me, right, where I'm not touching my crypto portfolio for a little bit. On the other hand, you've got a lot of people who've been in crypto for a long time and they're just deciding to cash out at the moment. So I do think it's a combination of both. So
you wouldn't be on these kind of stumbles here, Maya. You wouldn't be buying these dips, or you would?
I would be buying the dips.
You would?
I would. I would also be cost dollar averaging, which is exactly what institutions are doing with ETFs now, right? So I think this is where I say to folks, if you don't have money to lose, I think you should just sit back and maybe pick up an asset that you really believe in. But other than that, I think you should just wait a little bit.
What do you say about, there's been Bitcoin bulls on set in that very chair you're sitting in, who said, and I asked them why they believe in Bitcoin. And some of them say, why? Because it's digital gold. But I just wonder if some viewers are watching this now and they're kind of looking at all this and saying, well, why don't I just stick with plain old gold, which seems to be ripping here? Why not just stick with just tried and true yellow metal instead?
Yeah, Josh, I'm not going to give you the answer that everybody else tends to give you, which is this whole kind of, Bitcoin maybe maximalism. I'll just give you a perspective that I've been living in for the last number of years. And I've spent about 10 plus years in emerging markets. And I've also spent working across 5 different continents in the world. And reality is that before everybody was seeing kind of de-dollarization here in the US, I was seeing it about 15 years ago, where I saw China move into Africa and Latin America and starting to own mines and supply chains. And I saw people trying to move away kind of from the Western dependence. And so for me, when I got into Bitcoin because of technology and its ability to really, when you read the Bitcoin white paper, it says peer-to-peer. I got in because of tech, right? And I would have never assumed Bitcoin would be at 125, right, or 122, or 112 today. And so I would tell you that I got in because it is a technology that really does enable peer-to-peer. right? And so, yes, you can own that digital bar of gold, but you can't really move it, right, in a sense, right? This is something you can carry everywhere you go. You can cash out, you can pay people with Bitcoin. And so it is a much more, it's easily transferable asset.
Let me ask you, in terms of near-term catalysts for that asset, do you look at the Fed and investors are betting a cut's coming? Is that a potential catalyst?
Yeah, absolutely. I think of Powell, just this morning, I wrote just a blog this morning
Concerned about the labor market?
Yes, yep. And he basically says, hey, there isn't much liquidity in the market, right? And so if he cuts, absolutely. I mean, we're going to see a lot of retail come into AI, come into rare minerals, right? This has been a hot topic for the last week as well, and absolutely into crypto assets, because this asset class is not going away. It is only going to proliferate into tokenization and into stable coins further.
Do you have line of sight, Maya, into what we've been seeing in terms of ETF flows? Have they been stronger? Have they been weaker? And who's committing capital? Is it retail? Is it institution?
Yeah, they're kind of stable in the last week. You haven't seen massive positive inflows on ETFs, but you potentially would, right? If there's a rate cut. If there isn't, if we keep on the same playing field as we have now, I don't think that we will see inflows in ETFs. People are on the sidelines at the moment, so I don't expect any massive inflows at the moment.
I once asked Mike Novogratz, I said, is the Bitcoin market going to be as big as the gold market? Said yes. In fact, he cut me off. He was so great. Yes, absolutely, done. Are you that optimistic and confident?
Yeah, love Mike, friends. I'm not sure.
Why? Why do you say that?
Because I think it's going to take a little bit longer until we get there, till we can really compare to gold. Now, some might say you're absolutely crazy, right? Bitcoin is going to overtake gold. Yeah, it will in the future, potentially, yes. Particularly if we see clear regulation, Clarity Act is in place, market structure bill is in place, right? We see tokenization coming. We see Ethereum kind of proliferating all over. We see Bitcoin adopted as a payments platform. Yeah, 100%. But I think until then, I'm still kind of more bullish on gold.
Let me ask you, I get you on this. Let's say, Maya, you're hanging out with friends and family down there in Miami, and they say, Maya, what should I invest in? Should it be Bitcoin or Ether? And I can only choose one. What would you tell them?
Tough question. I would say probably Ethereum, because it is a...
How come? Why you choose that one?
It's a yield-bearing infrastructure, right? It's a programmable money infrastructure. So Bitcoin is a digital gold, and Ethereum is actually useful. It is being used today, we like it or not, right? It is in infrastructure on Wall Street at the moment. Every largest institution on Wall Street is piloting on Ethereum. And so it is something that is going to be useful. And I don't know if you saw an announcement this morning of Larry Fink saying they're building their own tokenization platform. JP Morgan yesterday announced they're putting in 1.5 trillion into security assets, right? And AI and infrastructure, right? That is all going to be connected onto digital infrastructure. And I think I would bet on things that are going to be used when it comes to that.
Maya, great to see you. Great to have you on set. Thank you.
Thank you so much, Josh.
Bitcoin is rebounding today to some extent after Friday's steep losses. Have the jitters been shaken out, or should investors prepare for more turbulence in the sector? Joining me, Kavita Gupta, Delta Blockchain Fund founder and general partner. Good to see you, Kavita. And I want to talk about some of what you're investing in. But first, we got to talk about what happened Friday, which seems to have really been exacerbated by the leverage that people appear to be taking out to buy crypto, and that then all crumbles when you see a downside move like that. In your view, is that partly what happened, and what are the implications then for crypto going forward?
It's been a crazy market with $20 billion wiped out in liquidity on one day. And there has been a lot of conspiracy theories about what really happened. Of course, Binance said it has a technical glitch with some of the altcoins listed way below what it was in any other places, which made the liquidity really happen in the perp market with a huge response on Hyperliquid, a bad response with a over $30 billion liquidity playing in. Lot of different applications. It was like a complete house of cards going down with a lot of liquidations going from top to bottom. And that has taught us, or for a lot of people, it gave us flashes back to 2021 FTX Luna crash. The only thing out here is market recovered very, very fast. Like ETH figured out above 4K again. You could see Solana going up again 13 to 15%. The blue chip tokens have definitely picked up. Doge did a really good turn back, but the altcoin has really washed down. And we're going to see some time before the altcoin rally going to happen again.
And do you think for most investors that the place to be is not necessarily in those altcoins, but more to stay in the more sort of established and liquid markets in crypto?
I think, Julie, that depends upon whether it is going to be institutional investors versus retail investors and the profile of your risk. If you're an institutional investor, you are anyways going Bitcoin, ETH, Solana, XRP, Doge, like bunch of those very blue chip tokens, which are doing very good recovery. But if you're a typical crypto trader or managing a liquid fund like us, which has a little bit more risk associated with it, you're going to still go with a very sound technical coins like EtherFi, Sei, Aptos, Sui. But yes, there has been a bigger wash over there, but we are expecting a bigger recovery just based on the technology and the team supported to it.
And Kavita, I'm curious kind of where we are in terms of the next technological wave within crypto, or even policy wave. You know, this year we have seen obviously a big sea change from Washington. We've seen stablecoins sort of take more institutional hold with the IPO of Circle as well. What should we be looking for next in terms of, you know, sort of the next phase of crypto?
When we think about technology, I mean, I would have said if it's just a trend, digital asset treasuries are always already taking $1 trillion, $1 billion. And also one of the reasons that deities like Tommy Lee's digital asset bought a lot of ETH at the low point. But if we are talking only about technology wave, I would say two big ones. The interoperable stable coins are going to be a big technology, because if every technology company, if every bank is going to issue their own customer stable coin, we're going to have a huge problem in the interoperability. The very similar thing which we saw when there are 1,000 different coins, different layer one blockchain like Solana, Ethereum, Arbitrum, Polygon, etc. came in. How do you do the interoperability and settlement? And then the second big one, which we are already seeing with Ondo and Athena slowly getting very big institutionalized, are the yield products. Today, when you have USD, you are expecting somewhere treasury rates of 2 to 3%, all the way up to some savings and different hedge fund products. But also with stable coins, you can easily go between 6% to 15% using decentralized finance. And that, I think, is going to be a huge institutional adoption product and going to change the way we see Wall Street or the banking financial system.
Kavita, we'll be tracking it all. Thanks so much.